These are multiple choice questions on financing as a study guide to help you prepare for your affiliate or broker exam. I'll be narrating these questions for our viewers who are only listening to audio. If a lender forecloses and suffers a loss, he may sue the borrower for the loss. This is called A. Executory agreement, B. Mechanics lien, C. Deficiency judgment, or D. Attachment. C. Deficiency judgment. Usury laws control A. Maximum interest rates, B. Loan amounts, C. The federal debt, or D. Down payment. A. Maximum interest rates. Regulation Z applies to A. Business loans, B. Consumer credit transactions, C. Commercial loans, or D. All agricultural loans. B. Consumer credit transactions. The Real Estate Settlement Procedures Act's primary purpose is to A. Regulate cost of credit, B. Regulate real estate license, C. Regulate interest rates, or D. Regulate real estate closings. D. Regulate real estate closings. Which of the following is not required to be disclosed under the provisions of Truth in Lending Act? A. PMI insurance premiums, B. Discount points, C. Origination fees, or D. Attorney fees. D. Attorney's fees. A farmer borrows money from a loan institution and pledges his land, buildings, livestock, and farm equipment. He has given what kind of mortgage or deed of trust? A. Purchase money mortgage, B. Package mortgage, C. Blanket mortgage, or D. Wraparound mortgage. B. Package mortgage. Thomas Magnum has a mortgage loan which requires an initial monthly payment for the first year of $646. The second year his payment will be $694.45, followed by $746.53 the third year, $802.52 the fourth year, $862.71 the fifth year, and leveling off at $927.42 for the sixth and subsequent years. He has which of the following? A. Adjustable rate mortgage loan, B. Graduated payment mortgage loan, C. Non-amortized mortgage loan, or D. Precipitation mortgage loan. B. Graduated payment mortgage loan. A purchaser has executed a mortgage to a seller for part of the purchase price with the understanding that even though the payments are amortized for a 20-year term, the balance must be paid in full at the end of the third year. Which of the following best describes the arrangement? A. A package mortgage with full amortization, B. A purchase money mortgage with a balloon payment, C. A blanket mortgage with a balloon payment, or D. A purchase money mortgage with an interest-only payment for 3 years. B. A purchase money mortgage with a balloon payment. If a foreclosure sale brings in more than enough funds to satisfy the lender and to pay the costs of the foreclosure, the balance is A. Kept by the lender, B. Returned to the foreclosed homeowner, C. Kept by the attorney, or D. Paid to the new owner. B. Return to the foreclosed homeowner. Which of the following deals in the secondary market? A. FNMA, B. FMHA, C. FHA, or D. VA? A. FNMA. Tennessee uses deeds of trust. In a seller-financed transaction, the seller is the A. Beneficiary, B. Trustee, C. Mortgagee, or D. Trustor? A. Beneficiary. A contract for deed is a financing device where the A. Buyer gets the deed immediately, B. Seller keeps the deed until all the payments have been received, C. Contract is voided by death, or D. Seller subordinates his contract to a bank's mortgage. B. Seller keeps the deed until all the payments have been received. To pledge more than one parcel of real estate as security for a note is A. Package mortgage, B. Blanket mortgage, C. Open-end mortgage, or D. Junior mortgage? B. Blanket mortgage. If a lender charges 12 discount points at the closing of a loan transaction, then the lender's return is increased by approximately A. 1/4% per year, B. 1/12% per year, C. 12% per year, or D. 1.5% per year? D. 1.5% per year. The best example of the primary market is A. FNMA, B. GNMA, C. Savings and Loan Associations, or D. FHLMC? C. Savings and Loan Associations. When a loan has been paid off, the trustee gives legal title back to the homeowner by executing A. Promissory note, B. Deed of reconveyance, C. Devise, or D. Codicil? B. Deed of reconveyance. The subordination clause, sometimes found in mortgages and trust deeds, covers which of the following actions? A. Waives first rights to another party. B. The loan is required to be paid in full when the property securing the loan is sold. C. The borrower must pledge the appliances to further secure the note. Or D. The borrower must pay off the loan in full if a default occurs. A. Waives first rights to another party. If a buyer borrows $80,000 at an annual interest rate of 10% and the monthly payment is $700, what will the loan balance approximately be after the first monthly payment is made? A. $79,300, B. $79,333, C. $79,967, or D. $79,985? C. $79,967. A mortgage usually gives a lien to the lender. A deed of trust does what? A. Gives a lien to a trustee. B. Gives a lien to the lender. C. Gives legal title to a trustee. Or D. Gives legal title to the beneficiary? C. Gives legal title to a trustee. If a lender agrees to a 75% loan, what will the loan amount be if the sales price is $50,000 and the appraisal value is $48,000? A, $40,000, B, $36,750, C, $36,000, or D, $35,950? C, $36,000. A type of loan that includes the balance of the first mortgage loan and becomes a junior mortgage is A, a reverse annuity mortgage, B, a wraparound mortgage, C, a pledge account mortgage, or D, a growth equity mortgage. B, a wraparound mortgage. To amortize is to A, pay interest only, B, require a balloon payment, C, pay off a loan in installments, or D, subordinate to another lender. C, pay off a loan in installments. Equity is A, the difference between present value and loan balance, B, the depreciated value of a home subtracted from the sales price, C, the sales price less the loan balance, or D, the fees paid to obtain the loan. A, the difference between present value and loan balance. An 80% loan was obtained by buyer Jethro. If he paid $600 in interest the first month based on an annual interest rate of 9%, what was the sales price? A, $80,000, B, $100,000, C, $90,000, or D, $66,600? B, $100,000. The clause found in deeds of trust or mortgages that enables the trustee or lender to demand the payoff on all remaining sums when the borrower defaults is A, subordination clause, B, escalation clause, C, acceleration clause, or D, defeasance clause. C, acceleration clause. The highest loan to value would be in A, VA guaranteed loan, B, FHA insured loan, C, conventional insured loan, or D, conventional uninsured loan. A, VA guaranteed loan. Reacher borrows $48,000 at 10% for 30 years. His monthly payment is $421.23. Approximately how much interest will he pay for the first 3 months? A, $64, B, $1,264, or C, $1,200, or D, cannot be calculated with the information provided. C, $1,200. A lender is to make a 90% conventional loan on a sales price of $140,000. If 2 points are being charged and a 1% origination fee is being charged, how much will the borrower have to pay at closing? A, $18,200, B, $14,000, C, $18,800, or D, $17,780? D, $17,780. If a lender agrees to advance mortgage loan funds in installments rather than all at once, it is probably A, term mortgage loan, B, land contract, C, construction mortgage loan, or D, balloon mortgage loan. C. Construction mortgage loan. A borrower obtains a loan and pays $412.50 in interest the first month at an annual rate of 11%. His loan is 90% of the sales price. How much did he pay for the home? A. $45,000, B. $50,000, C. $37,000, or D. $37,500. B. $50,000. A mortgage loan wherein the borrower is not personally liable for the debt is known as A. Non-recourse loan, B. Non-amortized loan, C. Exculpatory loan, or D. Novation. A. Non-recourse loan. Jada borrowed $75,000 at an annual interest rate of 8% for 30 years with monthly payments of $550.32. What will the total interest be over the life of the loan? A. $198,116.43, B. $211,613.34, C. $123,115.20, or D. None of the above. C. $123,115.20. That's all of our financing questions. Be sure and check out our other videos as you continue studying for your licensing exam.